As a U.S. citizen living outside the United States, you are still required to file a U.S. tax return every year, assuming you earned enough income to exceed your personal exemption. This is so even if some of the income you have earned might be exempt from U.S. tax. So when it comes to filing your U.S. tax returns, there are a number of other filings that you may have to make where even if you don't file an actual tax return, these other disclosures may need to be filed. The most common of which is called an FBAR, a Foreign Bank Account Reporting Form. With this form, you're disclosing any bank accounts, brokerage accounts, investment accounts, any type of financial account in which you either have signature authority over or financial interest in, and the aggregate balances were greater than $10,000 at any point during the year. This FBAR report would need to be filed even if you don't file a tax return because it's filed separately. Some other types of disclosure that might need to be filed even if you don't have to file a tax return would be if you are the beneficiary of a trust. In Canada, this would include things like your TFSA accounts, registered education savings plans, as well as your RRSPs. Now, the RRSP disclosure is something that's included under the treaty, and there are a number of elements to the treaty that can be utilized by U.S. citizens living abroad, and you should familiarize yourself with those, because even if the treaty says you don't have to pay tax on something, for example, if you receive U.S. Social Security and live in Canada, it does not mean that you don't necessarily have to disclose that position in a U.S. tax return. So our advice is if you are a U.S. citizen, that you contact a recognized tax professional that deals in cross-border taxation, such as our firm here at Colby McGehee, and we can properly advise you on what your filing requirements, if any, may be.